Is Asia hitting the ceiling? Friday marked just the first day up out of 3. Mark Galasiewski, editor at Elliott Wave International, has been studying and saying for the past 2 months that this is the end of the rally in Asia. In March last year, they recommended going long just before the market started recovering. So if you listen, you made money. And he joins us today from Tokyo. Mark, morning to you. Why is the rally done? Why does it not have legs?
Ohayou gozaimasu, Bernie. Yes. I should say, when I say yes, when the rally is over, we're talking the wave up from the initial wave up from the March lows last year is over. But recent action has suggested that this decline is corrective, and therefore we're going to see one more wave up sometime in the future. But first we have to get through the correction.
Okay, and when is this going to come? What does your timeline tell you when we're going to see the last gasp before you should catch the wave, maybe cash out at the top, and then call it quits for a while?
Well, again, in wave analysis, we have pattern, price, and time. Pattern being the form of the price action, and then there's price are the relative relationship between the price waves, and time, the last component, is the least reliable and the most difficult to forecast. So I'm really hesitant to give you a time frame on that, but we're looking for at least a decline of a few months. The correction is not over with yet. But after that, a rise into the end of 2010, possibly 2011, for the next major top.
Let's take an example here on the markets. I know I have at least 3 examples: Korea, Hong Kong, and Japan. You want to take a poster child to illustrate your point here?
Okay, sure. Why don't we start with the MSCI Asia Pac?
Okay, we'll get that up. Go ahead.
Okay.
There we go.
I don't see it on my screen, but I'm assuming it's there. Is it labeled 5 waves down?
It's got numbers on it.
Okay,
1,
good.
2, 3, 4, 5, and then X, W, Y, X, Z on the way up.
Great. Okay, we've got, for viewers who are not familiar with Elliott wave analysis, briefly I'll describe what we're seeing here. Back in 1 year ago, in March, we were looking for the end of the correction because you see 1, 2, 3, 4, 5 waves down. And at that point, any break of the new lows below the 2008 lows was the potential end to the rally, and indeed that's what we had. We had slowing momentum, oversold sentiment, and price relationships were looking very good, so we went long and on March 23rd. And since then we've had a rally. Now, in Elliott wave analysis, 5 waves in one direction, whether it's up or down, is going to be followed by a corrective wave, often labeled ABC. In this case, we've labeled it, it's a little bit more complex, but this wave, WXYXZ, is done. You can see the break of the trend channel if they've given it there, and that indicates it's a strong sign that the rally, or at least this leg of the rally, is over. So now we're in corrective mode.
Okay, yeah, I can see it tail end there, definitely head underwater. Right. There are exceptions, though. Korea would stand out as one.
Right, and the main difference in the region is the difference between 5 waves down and 3 waves down. Basically, any market that bottomed in 2008, with few exceptions, are a 3-wave decline, and that is corrective in our sense of analysis. That means that there will be new highs sometime in the future. So most of your emerging markets, your Koreas, Taiwan, Indonesia, Thailand, what are some others on the Indian side, Pakistan as well. So that's very different from some of the developed markets like Japan, Singapore, and in some markets or some indexes in Hong Kong, which bottomed in 2009, along with the rest of the developed world. Those, again, you've had 5-wave decline down to the 2009 lows. Those rallies are now bear market rallies, and those should resolve in another 5-wave decline to new bear market lows sometime in the future.
Mark, let me show Hong Kong really quickly. I know you've been talking about Hong Kong and Japan. They're still showing the Korean market for summer. There we go. Hong Kong, where are we headed here? There's a lot of questions over, knock-on impact from China and maybe the withdrawal of stimulus. We've only got 30 seconds before you hit a break, so give me a really quick answer. Okay, well, you see, it's basically from the year 2000, the triangular correction. You see A, B, C, D, E. We have not yet completed the wave D, and then a final wave E down will finish off the bear market from 2000 in Hong Kong, and to be resolved in a bull market after that sometime later this decade. Mark, thanks a lot for sharing your views with us. Okay, we'll talk to you soon. Mark Galasiewski, Elliott Wave International.